So before I get into all the details of how I prepare, how I analyze the financial statements, and how I actually prepare the individual tax returns, I wanted to first tell you how I got to this point. I think since I told you I'll be making a video CV, I think it will be a good idea to just give you guys a history of how I came up to this stage. So, firstly, I'm just gonna have a look at my LinkedIn. I'll just show you guys. I'll just go through the LinkedIn profile, my LinkedIn profile with you guys. So now I'm a business services and tax accountant, and I mean, this is where I learned the most. I feel like this is where I learned a lot of diverse things in here. I think it's because I met a very good mentor in this company. He let me know that accounting is not just subject to one area. So just because you're a tax accountant doesn't mean you're just bound to tax. You're able to be exposed to diverse area in finance in general. So I would do management of accounts. I mean, someone else classified this as virtual CFO. So I would check up whether the accounts have been correctly allocated weekly, and then I would prepare month-end reports such as IAS, monthly revenue data, quarterly BAS. I would also calculate PAYGI and prepare customized management accounts report. So that is accounting in general, but also I was able to be exposed to financial planning side of things. So this was more admin side of things, but I was also doing reconciliation of statement of advice and records of advice against the platforms using Xplan. Xplan would have a client data. I would match their statement of advice that financial planners actually prepared, and I would see if they're correct. So it's more like proofreading and checking whether the transactions have been processed correctly. That was one of the things I did. I actually went into a meeting with a financial planner to see what they actually do as an advisor. This was kind of like a one-off role, but I put my hand up to volunteer to help out because I wanted to learn new things. Also, another thing would be I was acting as a member of social committee and training committee just to organize and facilitate events in the company just for the lols. I like to be involved with a lot of things. I think the trigger for me to grow in this company was actually COVID. Before the COVID hit, I was kind of interested in the real estate market because my colleagues, they are landlords, and I think that's why I was interested in this side of things. I didn't know anything. I legit know nothing about real estate. But then from then, I got to be interested in the mortgage brokerage side of things. But then I didn't really feel the need to get a license for that because that's not my passion. But I think it's good to know different kind of things because for a business services and tax accountant, you are meeting with clients who have this kind of assets. So it's good to know this kind of stuff when you're calculating CGT, when there's a sale of property, when there's a disposal or transfer of property, then you have to calculate CGT. So you have to know what additional things to put into cost base. There would be additional things other than the sale proceed and the cost base, the purchase price, because people just assume that, I assume that when you gain profit or when you get loss from disposing an asset, then it would just be sale price minus purchase price. But actually there's additional factors that go in: stamp duty, depreciation, legal fees, agent fees, any sort of additional fees that's incurred because of the disposal of asset, that you need to put that in your CGT calculation. So that's what accountants do. One of the things that accountants do, calculating CGT, capital gains tax. After COVID, I was very interested in the stock market. From then I started watching videos, reading about the stock market, the shares and everything. Just a few things that I do say, just like this. I make a playlist. I feel like Yahoo Finance has good news channel, so I would listen to this when I'm getting bored at my work, when I'm doing things that I don't really need to use my brain for. And also earnings call, I think this is another thing that I didn't really think about. So something like Disney stock. What would a CFO say about their company performance, their market outlook, all this kind of stuff? I didn't really know anything about this until I got interested in the stock market and private equity market. So that would include private equity, venture capital. Also, there's another side, investment banking. So I was very interested in all of this stuff. And I didn't think this would really apply in the accounting industry because, this is a completely different stuff. But actually, I had one client who is interested in listing their company. So he was actually talking with this private investor, and from then I could really think in the buy side and sell side point of view because I already had some knowledge in that area, just private equity and venture capital area. So I think that's why accounting is not limited, because a lot of clients have different experience, they have different interest. So that's why I think it's good to learn different skills in this industry. So I guess one of the things that I did was Coursera. I haven't finished this one, but because this is really hard, the private equity and venture capital one. But I did up to chapter 4, but I haven't finished. I haven't done the exam, but yeah, I think Coursera is good. It's like a it's a uni lecture, but from different unis. I did one from Stanford. So that's another thing that I did. There were other things that I learned from working as a business services accountant. So these days, very hot topic, cryptocurrency, Bitcoin, Dogecoin, everything like that. When you have spare money to spend, you would try going into this market. And that means there's tax consequences. And ATO actually has some rules around this. The regulation hasn't been all set, so this is still a work in progress industry in aspect to the regulation part, but there are certain rules that's been set, because when you're disposing an assets, then you would have to pay CGT. So ATO has some articles on this, and this is one of the things that I was also involved with, because I'm very into this kind of the fourth industrial revolution type of things. So there you go, there's tax treatment of cryptocurrencies, transacting with cryptocurrencies. I didn't know some cryptocurrencies paid dividend, and that will be classified as an assessable income. So you would have to put that in your tax return as well. So cryptocurrency, it's an area of specialty. So I did see a lot of cryptocurrency tax accountants. I didn't know that there were that many who actually specialize in cryptocurrency, but I think it's good. It's good to be exposed to this kind of stuff because it's ever evolving. Due to the fourth industrial revolution, you need to be updated with all this kind of stuff. So I'll be studying digital finance in my next semester for CPA. And because I was interested in the finance area, for my first semester, I studied financial risk management and I passed. I thought I was gonna fail. So this is the candidate exam report. And then I got, foreign exchange and commodity price risk. I got 100%. So I was really happy to see this last Friday. So yeah, that's why I think accounting is not limited. I just want to make this point clear that just because you're a tax accountant or a business services accountant doesn't mean you're just gonna do tax the whole time. You will be doing tax. Of course, that's what people pay you for, but you need to be flexible in your thinking because clients will come up with questions that you don't expect. Another thing that I was interested in was insolvency. So I had another client who had bankruptcy issue, and I didn't really think about this kind of stuff, but things happen in life. In order to understand what the client was looking for, I had to understand insolvency topic. Just a brief overview of what insolvency is, because I didn't really know about it. I mean, I didn't really care about it, but until now. I'm not gonna go too much in depth with this because I'm not an insolvency expert yet, but I think this is a good foundational knowledge to have. So insolvency is being unable to pay off your liabilities. So if you have a debt and you can't pay off your creditors, then you're an insolvent entity. There are two main entities. There's company insolvency and individual insolvency, personal insolvency. So for company insolvency, there are three types. So liquidation, voluntary administration, and receivership. Liquidation is when you wind up the business. So if you can no longer operate your company if you are in liquidation, so you can't come back. Whereas voluntary administration and receivership, you're able to bring back that alive. Whereas personal insolvency, when you're a director, you are liable for anything that happens in the company. Because you're personally liable, you're either going to go into this personal insolvency agreement where you negotiate with the creditors to see if you can reduce the debt amount. You're negotiating to not go bankrupt. That's the main part, because when you're bankrupt, then you can't be a director. You have to give away all your assets. I mean, not all, but you have to pay off the creditors. No one wants to be bankrupt, but when you're bankrupt, you can have a fresh start. If you don't have a choice, you have to go bankrupt. But yeah, so that's another thing that I was exposed to when I was working. I mean, when I'm still currently working, but yeah, that's another thing that I was exposed to as a business services accountant. Okay, so that's like the main spicy things that I did in my current company.